Have you ever wondered how to start investing with just a little bit of money? You're not alone. Many people feel very overwhelmed with investing jargon like portfolio management, asset allocations, PE ratios. They don't know what to do with it. They're also weirded out by that crazy 20% in each asset class rule. And how in the heck are you supposed to do that when you only have $100? Well, in this video, I'm going to take you through exactly how it actually builds. Most of those rules are for people who have actually been at the game for quite a long while. Today, what I'm going to do is take you through my portfolio as it grew over time so that you can see what allocation looks like for a newbie and how you work yourself slowly over time into something like a more pro setup. Guys, if you don't know me, my name is Austin. I just started a financial education company. Our goal is to help 1,000 people reach financial security, and if we do 1,000, we'll go to 10,000. Okay, so when I began investing, I did not know what I was doing. I just started buying stuff, mostly cryptocurrency, which is not a terrible way to start, maybe not the best way to start, who knows. After I've been doing it for a couple of years, I decided that I needed to have a full picture of my net worth and where my allocations were. So this is where we start, is I've actually been investing for a couple of years already at this point. And the basic way to do it is this: drop each asset in a line on Excel, put the dollar value that you have in that asset, and then click Insert Tables, Recommended Table, find the pie chart. You can also add little data callouts there to make it super easy to look at. Now, my net worth tracking methodology has gotten way more complicated now, but you can see this is how I started. And it's actually not a terrible way to do it. So you'll actually see here that I had 46% of my net worth still in my vehicles, which is nuts. Vehicles are a depreciating asset. You do not want to have almost 50% of your portfolio in things that go down in value over time. It's just not great. Having said that, this is where a lot of people are starting. Luckily, I didn't owe anything on those vehicles. I owned them outright, so I wasn't paying debt service, which is great. So I also had about 14% in cash. That's my emergency account. 13% was in equities. This is mainly my retirement account, my 401k. Then I had 2% allocation for speculation. That's cryptocurrency and like stocks that I think are going to do super well. Looking back, it was really eye-opening to see how much I actually had in collectibles. I'm not going to tell you exactly what it is I collect, but if you guys want to drop something in the comments and make a guess, I will tell you if you get it right, but you won't get it right of what I collect and what I had so much of my net worth locked up in this collectible item. Anyway, on the right side of the chart, you can see my debts. I had a few credit cards, kind of a lot of student loan payments. That's like 75% of my debt was student loan payments. And then I think I had a little bit of medical on there also, which is what that other one is. Fast forward one quarter and you'll see some changes. My crypto grew, which was great. My vehicle value stayed steady instead of going down, and my other investments started to increase significantly. I was focusing here on reducing my exposure to depreciating assets and buying more things that were going up in value. The next quarter, crypto continued to rise by about 1%, while my vehicle value remained the same, which was awesome. Then came a fairly major shift when I went ahead and bought my first house. All of a sudden, 40% of my net worth was in real estate, and that drastically altered my asset allocation. I did have to sell some equities and some cryptocurrency in order to get the down payment up for my house, and unfortunately, my cash reserve dropped way lower than I wanted them to at this time. See, I thought that my monthly recurring expenses were going to be quite a bit lower when I got into the house, and then realized that there's all kinds of phantom costs, and I had to adjust for that. And so a lot of the next couple of months were all about saving up to replace the emergency fund. In this quarter, you can actually see I actually added an extra collectible in there. Again, see if you can guess what it is that I collect and I'm super addicted to. I also had to liquidate some of my equities to cover my down payment on my house, and so now looking at this, I remember that I didn't actually do that until after I'd actually closed on the house. And then the equities came out the following quarter. Then going on a couple months down the road, this is where private equity made its debut in my portfolio. I started diversifying by buying a PE deal, which was my first PE deal. Shout out to Cody Sanchez. Thank you for giving me the idea to get into private equity. Here's where I really started seeing my net worth start taking off dramatically. Now, if you look at my latest chart, my goal is to try to get my house under 20% of my net worth. However, with rising property values, that has been a challenge. I understand that's a massive first world problem to have. Like, gosh dang it. I can't keep real estate under 20% of my asset allocation because my property value keeps going up. So I'm not complaining about it. But that's what I'm shooting. I've also made another private equity acquisition during this time. My crypto holdings are steady, going up to 8%. I like to keep them under 10% if I can, but again, crypto is going to boom here for the next year, maybe a year and a couple months, but I haven't added a whole lot recently. I'm buying a little bit of SUI and a little bit of NIR to prepare myself for the next bull run. I believe these two cryptocurrencies are super undervalued right now. Solana is starting to get to a place where It's probably the right value right now, but I want to buy things that are undervalued. So now I'm committed to maintaining my allocations. I want to keep cash below 10% of my portfolio and public equities under 20%. And yes, I am going to keep my collectibles hopefully under 10%. I might reward myself with another collectible once I get to that point. Guys, if this has helped you understand asset allocation and how you start out, the difference between having a fairly advanced account several years down the road and how you slowly move things over time towards the allocations that you want to have them in, please hit the like, hit the subscribe button, share this with a friend if you would, and start off the conversation in your community about money and finances.